In this complex country's expert perspectives, Damian Glendinning talks to Anders Jørgensen of Avallone to get his perspectives on the key findings from our recent report on KYC and AML.
So first thing, Anders, is start with the good news. Some of our members are reporting that banks are now increasingly willing to agree to a schedule and stick to it and have the data provided once to a central point and then share it. But this doesn't apply to all banks. Are you seeing a big move in this area? Are you seeing more banks being willing to do this?
Yeah, I wasn't surprised about that conclusion, but it's good to see it on writing, right? So we do see more and more banks upping their game in terms of the planning. And that's absolutely positive. So we do hear a little bit more positive stories, and then we'll get to that. It's probably overwhelmed by more negative stories, but I think some of the banks are starting to get this. And I think it's mostly driven by two things. One is that the banks have huge operational costs in doing this, so their planning, better planning also lower their operational cost. But I think the other one, which I think is the really good news for corporate treasurers, is that we see more and more banks actually start to focus on customer satisfaction. And I don't mean to be arrogant, they've always done that, but that they're starting to identify that a big burden for customer satisfaction is the KYC process. So yes, we're starting to see glimpses of hope in that perspective.
And to the extent it's a big burden for them too, this should lead to a logical conclusion that we all need to improve.
We all need to improve drastically. Absolutely, yeah.
But it's still happening very slowly. And by the way, some banks agree to schedules and then don't keep them.
Exactly. And I think it's happening very slowly. And I think there are a number of reasons for that. And it's not to feel pity for the banks, but it's a very complex problem to solve when you start to have larger populations of more complex customers. That's no excuse. It's about improving your processes and your technology stack. But I think that's one of the reasons that it's taking time for them to really get their hands around.
Okay, we'll come back to this later when it comes to how corporates manage the whole question. But before that, let's move on to some of the more negative comments. In the past, it was all about sanctioned countries and specific crime issues. Now it seems to be becoming more and more general. Is that something that you're seeing?
Yes, absolutely. And I also believe there's a pretty good rationale and explanation for why it's happening. And it is simply the increased geopolitical uncertainty around the world. So a bank will, of course, be super interested around sanctions countries. That's logical, right? And everyone is like used to that. But they also have a huge interest around what they would call high-risk country or ultra-high-risk countries. So there is these two levels where sanctioned countries are the worst, but right after are high-risk countries, and they will focus on these because that can be early warnings before becoming a sanctioned country, or just simply that these countries are associated with higher money laundering, tax evasion, terrorist financing risk. So I'm afraid that's here to stay, and it's going the wrong direction, I would say. So absolutely.
But also, presumably, it's the banks that get to define these levels of risk. There's no official publication, right?
No, it's up to them. And that's also what the regulation says, that each bank has to analyze their own inherent risk in their business model and where the customers are and the products they have. So you will have two banks with different opinions on Myanmar, or, okay, that's a very high-risk country. On a specific country, they will have different opinions. They will also theoretically have, or can have realistically different opinions around a certain industry, which can be based on their prior experience in that industry. So that's the name of the game, I'm afraid.
So there's nothing much from this, that there's nothing much a corporate can do to put an end to this, other than use their relationship influence.
Yeah, use the relationship influence, and it is a risk discipline, and it's part of the game of being a multi-bank corporate. One should stop hoping that it disappears, because it won't. And probably also stop hoping that it's going to get better. We can hope that it doesn't get worse, that the good things even out the bad things, right? And then we have a stable situation from now. And once you get to that realization, it's about, okay, I need to tackle the problem in the long term. So how does KYC become a sustainable long-term process for me and my team? I think that's what you need to do.
But also some people are saying that banks are asking questions about countries where they don't have a relationship.
Yeah. And this is the annoying part, right? So if you've been a customer for 10 years and then a bank suddenly starts, hey, by the way, you need to answer, do you have a relationship with all these countries? And you're like, no, I don't, I'm only domestic. You get annoyed, and that's on the banks. They should know, right? But then the legalistic point of view comes in that they may have legal counsel saying you need to ask them, and the customer have to be affirmative saying yes or no. And it's probably no, but we need them to tell us no. I know it's frustrating. Yeah.
So there's a big box ticking exercise going on in the bank.
There is, and there's a big exercise in terms of collecting data and reusing data and becoming efficient, both for the customer's sake, but especially also for their own operation cost sake. Yes.
Okay. In summary, your view is just get efficient about it and don't complain.
Yeah, but I actually absolutely think that there are reasons to complain. Because in all processes, where the process is not optimal, you will be exposed to unfairness and stupidity, right? So you should absolutely push back where you meet that stupidity. And that also works from time to time. But it is an uphill battle, and it's not going to remove the burden entirely.
The second area where there are more and more requests and more data being required is UBO, ultimate beneficial owner. And
Yeah.
that includes providing a lot of personal details of directors of every intermediary company. Is
Yes.
that something you're also seeing?
Yes. And there's also an explanation for that. Two-part explanation. One is that, again, every bank has to analyze their own risk and decide the level of due diligence they do. Typically, if you are perceived as a high-risk company or customer, they will go deeper from the 25% threshold of UBOs into 10% threshold. The other part driving it is actually GDPR. So data protection regulation has more or less effectively shut down public registers across Europe, which means the banks cannot access data publicly around who are the ultimate beneficial owners. So for example, in Denmark, that register would go down to 5%. So the bank could just go in and look, okay, Anders, he owns more than whatever percent of Avallone, right? But now that's gone. It's very hard for them to get that access, and then you can apply for getting access in country by country. But it just makes the data collection effort larger. So that's why they will have to increase and are increasing the kind of self-declaration process where they ask the customer directly, we need to understand who owns and controls your company. Personally, I think it's fair enough. So you are a corporate customer. You have a huge loan with the bank. You have a long-term relationship, of course. And the bank is asking you, hey, I need to understand the physical persons controlling and owning your company down to 10%. I think it's fair enough that a bank don't want an unwanted person to own 11% of a company instead of only focusing on 25%. 25% is a huge ownership stake. So going down to 10%, I think makes sense. So I understand the frustration, but the bad news is that's definitely something here to stay. And I think getting worse, I could see that ending up at 5%.
So the irony is that this is actually being caused by privacy laws.
Sorry to say, yes.
So your message is this is actually forcing the companies to provide the data which in the past used to be published but is no longer public.
Yeah, correct.
So you actually think this is inevitable and we need to get used to it?
I think so, yes.
It does create a secondary issue, which of course now that means that the corporates have to collect private data on the directors that they can't keep.
They do. And they have to be careful with that data because that's PII, right? So you're moving a burden to the corporates. Absolutely. And it is the wrong direction. Let's face it. It would be much easier if we had very strong public registers where the right people and companies can have access and retrieve data. But there's some way to go to get there, obviously.
Okay, so if we can come back to the starting point, which is what can corporates do about this? In the past, there has been the view that you can exercise very little pressure via the relationship. First of all, I think it's fair to say and logical that most corporates are not prepared to fire a bank over this. It does happen, but it's unusual. Let's put it that way.
Yeah.
And one of the factors has always been, even if you fire us, from the bank's point of view, if you try and go to the guy next door, it's not going to be any better. What you're going to gain. Now, if people are starting to actually have better processes and be more willing to agree things with customers up front, do you see that dynamic changing?
Yes. So in theory, if you find a strong, more or less global bank that where you start to really like the process, the digitizing, then the logic advice is, okay, try to reduce your banking group as much as possible and move to fewer banks where the process, that's a process you should have anyway as a corporate treasurer. And they know more about this than I do, just in order to simplify your banking landscape. So I think there's definitely something we do there. And if you have that opportunity, you can also start to put more pressure on banks and say, guys, we are going to leave you to this other bank if you don't shape up. Of course, that requires that the product offering is the same, right? If you still have cash management needs in very bespoke countries, you can't just leave that bank. But I think there's definitely an opportunity there. I think another opportunity which we see is that, and that's regardless whether you have a software tool or not, but the stronger internal process you run, the more well-prepared you are, the more rigor you have in your answers to the questions, the less problems you will have the banks. It's that simple. The more professional you stand out, the more calm the bank is in terms of the risk, and the faster the process goes. So I think that comes back to the beginning of, it's not going to get better. Hopefully not worse, but it's not going to get better in my point of view. So you might as well tackle this problem now and have a really strong process, however you design that process and however you design your tooling for it.
So this comes back to another comment which was made by our members on the call, which is banks are increasingly asking questions about the process.
Yes.
Does that indicate that if they're satisfied you have a good process and you can demonstrate it works, then afterwards it will be maybe easier to handle the requests?
Yes, I truly believe so. And it's something around the information you provide to the bank. Can you document that? Can you document who provided it to you? So it's about having strong policies in place you can share with the bank, and they can see the documentation. So the totality of the picture becomes much stronger. And it's also a lot of the reasons I think that you have a lot of back and forth with a single bank, and that's why these requests takes a long time. That's because your initial request is low quality. That to this annoying question, what's your business model? You get annoyed because you've been a customer for 10 years. So you reply very short answers, or a little bit annoyed short answers, right? But that's where the bank is coming back and say, hey, it's not enough. We need to have more from you. So preparing that up front, being able to reuse that data makes the burden less painful. You're never going to love it, I know, but let's hate it maybe a little bit less.
And that also leads to some people preparing standard packages. So if you have a package which includes, here's the process, here's what we do, here's the questions we think you should be asking, go read that and then come back if you've got questions afterwards.
Exactly. So you only spend time on the delta from your kind of foundational KYC package. There will always be additional questions because the specific region the bank is in has specific questions or needs or whatever it is. But then you only work on that added delta instead of working on the entire package every time.
That's very sound advice. That also leads to one other comment that came up several times. And I presume that you get an insight into this with the corporates you deal with. A lot of people on the call actually said, we don't want to put in place a process and we don't want to put in place tools because by doing that, we will take ownership. And we think legal and HR should at least be co-owners.
Yes.
I understand the concern, but how do you address that?
And I understand. I've also worked in large banks and large organizations, so I exactly know what's going on, who owns the problem, right? After meeting more than 500 corporates one-on-one, I probably only met 10 of them where Treasury did not own the KYC problem. So it is a Treasury problem because they have the relationship with the banks. But I totally agree, they are dependent on legal compliance, tax, procurement, a lot of other players. So there, I think, again, it's about setting up a process where you, in an easy way, can have that collaboration. But in the end, Treasury sends it off. And if this process goes wrong, it will hit you first because suddenly you're out of a bank account. 9 out of 10 times when we go in, it starts with Treasury, but legal is always on board. You have to have a shared decision. Yes, this is how we together run the process. Otherwise, it just becomes Treasury doing all the work. There is a need for that collaboration around starting up a process.
Okay. Taken a lot of your time already, and I appreciate it. As always, great insights. And as always, I assume that you'll be prepared to help any corporate that has any questions. As people can see, you are deeply into this question. If I could summarize, and please tell me if I've got it wrong, KYC isn't going to go away. It's not going to get simpler. It's going to keep going with ever expanding requirements. The solution is to get a good process, to have a strong, robust process, and then to present that to the banks and say, now you organize around this. Is that a reasonable summary?
Spot on. I would maybe add one thing that I think maybe a question a treasurer can ask their head of legal, and that is how many KYC requests do they receive from non-banks? So we focus a lot on the banks, and that's because that's the high complexity, but we see the biggest increase in requests coming at corporates is from everyone else than banks, suppliers, customers, vendors, investors. And that's another reason why the problem is not going away, because everyone is starting to ask KYC questions from each other as well. So I think this only increases the opportunity to build a business case for a Treasury to say, hey, we need a solid process, and they will be able to get legal on board because they also have a problem today.
And thank you for reminding me, because indeed many of our members also run KYC processes on their suppliers and customers. So this is spreading beyond just the banking domain.
It is. They are doing the same thing that the banks are doing. Yes, exactly.
Okay, but I'm sure in a much more reasonable way.
Yes, it's more simple. Absolutely.
Okay, bottom line, get used to it, get organized.
Exactly.
Okay, Anders, thank you very much for your time. Appreciate it. Have a great day.
Thank you for having me.